Let's talk about paper trading in Bitcoin. This is a hot topic now as well. The idea there that spot is not driving the price, that derivatives and paper trading of Bitcoin is the leader of the price here. You have a background in Wall Street, in financial engineering products. How do you see the Bitcoin ecosystem evolving from the side of the street, the derivative side, and is this, how much of a concern should this be, or is it a bunch of FUD?
Yeah, so let me start that, tell you a little bit about, first off, the halving, and then I'll end up with that. So just address some of the points from Fred and Andy. So people that know me know that I love to run numbers. So whenever Corey asks me something, oh, what do you think about this? My first reaction is that I don't know. Let me run the numbers. So we run the numbers and we come back. So a few months ago, we were thinking about, okay, so what's the impact of the halving? You know, should we be looking what's going to happen with the price, with difficulty? So we ran the numbers, right? And the reality is that, first of all, there are the data points that we have in terms of halving. They're not enough to come to pretty much any conclusion. But if you look historically at Bitcoin price, right, so we got the whole data set of price, and you try to find patterns of distribution of how returns really work, very quickly you see that there's a lot of autocorrelation, which means that price depends on time and depends on past price, right? So whenever you have price moving up, price tends to move up again. And the other thing about Bitcoin, which is super curious, and I think I don't think there's any other asset class like this out there, is that most of the times, Bitcoin is moving either sideways in terms of number of days. It's either sideways or down. And that makes it really, really hard to hodl, right? Because what means is that you're going to have months and years of pain, and you're going to have days of glory, right? So being a hodler, by definition, by distribution of prices that you see historically, it's extremely hard, right? Why did I tell you all of this? Because when you talk about derivatives, the first thing you're going to talk about is probabilities, and to get a sense of probability of what's going to happen in the future, your best bet, it's not perfect, right? But it's looking at the past and seeing what has happened, right? It's impossible to really predict what's going to happen with Bitcoin price. That's the first thing that you conclude by looking at historical returns, right? But the other thing, which goes back to the halving, the fact that it actually autocorrelates a lot means that sometimes, particularly in periods of low liquidity, a small move, some small news that bumped the price up, the marginal seller out there would actually go through the short-term sellers, and then the price jumps up significantly, and that feeds on itself, right? And this explains, I think, this is kind of like the psychological part that explains why price moves up very, very quickly, right? I'm very bullish. I think that we are going to see that soon because liquidity has been drying down, right? So we see that these things are starting to happen, and it's not going to take a lot for us to see a very big move. Now, going back to your original question, I addressed a little bit about this morning, but I'll talk about in a little bit more detail. So when we talk about Bitcoin pricing, Bitcoin is the first asset also that taking delivery of it at the end of the day, it's very, very easy. It doesn't cost anything, right? When you look at, I'll use an example. You look at the oil ETF out there, USO, right? When you buy your USO, you're buying it with the expectation that you're going to receive the returns of oil, right? Doesn't happen. In fact, it underperforms oil significantly. Why? There are a lot of reasons I can explain, because you have to look at the cost of storage, insurance, transportation, delivery, all of that, right? But the reality is that when you incorporate all of that, future prices are going to incorporate that, right? So people talk about, oh, I'm looking at the future curves, and it's showing that price of oil is higher, it's lower. Has nothing to do with expectations. It has everything to do with all of these factors that I mentioned. Otherwise, there's an arbitrage where you could buy oil today, sell the future, right, and just make free money. Because of these things, right, when you look at the USO, it should underperform the underlying. Bitcoin doesn't have this problem because at the end of the day, it's an asset that the cost of storage is zero, cost of transportation, it's zero, cost of insuring if you want to buy insurance, you may pay something, but most of the cases, it's also zero. So at the end of the day, the only thing that really matters on future prices for Bitcoin, it's interest rates. Why? Because when you buy a future, you're not putting cash down, right? You're expecting the price to go up in the future, and then there's the exchange of cash. So that's all that matters at the end of the day. So when people talk, I hear this a lot, well, the future prices are up or down, Bitcoin price is going up and down. It has nothing to do with that at the end of the day. It's just a matter of interest rates, and that's it. Otherwise, we can arbitrage that market, right? So there's a lot of speculation around if futures drive the price up, and the reality is that it doesn't, right? It's another vehicle where people can get access to liquidity, and they may be able to move a little bit of the prices outside of that arbitrage level in the short term. But if you look a week, a month, it's impossible to do that. What really happens in the Bitcoin market, and this is a very long answer, sorry, but I'm wrapping up.
All right. The zero arbitrage, pure finance bro answer really hits me in the heart, so keep it going.
So, yeah, but just to wrap it up, I think on Bitcoin, what we have seen that people confuse with being derivatives actually moving the price is pure fraud, right? It's people that hold Bitcoin, that it's not their Bitcoin, and they're selling that Bitcoin, and they're putting pressure on the price down, right? But eventually, this also gets wiped out one way or the other, because the Bitcoin needs to be delivered. Either you're going to have an FTX that, appears that doesn't have the Bitcoin that they were supposed to have, right? Or the Bitcoin needs to be delivered, and they need to buy the Bitcoin somewhere. The risk needs to be offset somewhere, right?